I'm 680 News Senior Business Editor Mike Eppel. Always nice to get a pleasant surprise when we're talking about the economy. And that was the case in the January facts and figures in today from Stats Canada when it came to economic growth. The talk was the economy was slowing. It started to show some mediocre results in the late stages of 2018, and the thinking was that the January numbers wouldn't be anything to write home about. Turns out they were much better than expected, as the economy expanded 0.3%. Many sectors of the economy doing much better than forecast to start the year. Doug Porter is the chief economist with BMO Capital Markets.
We always have to be cautious about reading too much into any one month, but it's very nice indeed to get a report, not just on the high side, but much better than really anyone expected. And I would just reinforce the point that this was the month that we really saw the beginning of the mandated oil production cutback in Alberta. And frankly, we've been dreading this report for quite some time, thinking that it was going to lead to possibly even a big decline. The rest of the economy looked right through that, and we saw surprisingly good gains in both manufacturing and construction.
Now, that move to the upside for the economy, at least in January, gave a little bit of respite to the selling we've seen recently on the Canadian dollar. The loonie gained a half cent at almost 75 cents U.S. And we also saw bond yields rise today, thinking being that the Bank of Canada won't be doing anything anytime soon with interest rates. Meantime, Ontario's manufacturing sector got a major dent when Fiat Chrysler announced that they're going to be cutting jobs at the Windsor minivan plant. 1,500 jobs to go by September of this year as they're eliminating the third shift that produces the Chrysler Pacifica and the Dodge Grand Caravan. Minivan sales to start this year have slumped dramatically for Chrysler, down almost 50% compared to a year ago. So the company looking at cutbacks. And of course, this is on top of the plans for General Motors to close the Oshawa assembly line later this year. Now, the end of the first quarter already today. And what a start it's been to the year for the North American stock markets. The TSX has had a very strong 3 months, up by better than 12%. Remember last year it lost over 10%, so a nice rebound, a bounce back, led by energy stocks, for example. Price for oil, who would have guessed that it would be up 32% in the first quarter of this year? And of course, that has led to higher prices at the gas pumps, but at the same time, a better rate of return for energy market investors. Blackberry celebrating a record-breaking fourth quarter and full year when it comes to software sales. The company getting very little revenue when it comes to the actual manufacturing of Blackberry smartphones. They farmed that out to a third party years ago, and it's all been about software for in-car infotainment systems under the QNX label and self-driving vehicles of the future. Blackberry had sales of close to $250 million in its fourth quarter, a profit that was above expectations. The stock today was up by 13%, and for the year so far, up by 37%. And it was liftoff for Lyft on Wall Street today, the second biggest ride-hailing company making its debut on the NASDAQ. Lots of people wanting to buy this stock. They raised $2.5 billion in their stock sale, their market value for the company, north of $20 billion right off the bat. Of course, Uber, the biggest player in this segment, expected to go to the New York Stock Exchange for its stock sale later this year. It was interesting to hear from the co-founder of Lyft, Logan Green, talking about the future of these ride-hailing services and self-driving cars. Says that's still years away. From the 680 Newsroom, I'm Mike Eppel for City News.